Hi, and welcome to the Mortgage Reports. The Mortgage Reports serves as a comprehensive, user-friendly hub for anyone exploring mortgage options. Whether buying, refinancing, or tapping home equity, it combines real-time rate tracking, expert analysis, educational resources, and direct lender access, all with the goal of empowering users to make informed, confident decisions on the path to and throughout home ownership. Hi, my name is Mike Eshelman. I'm a residential mortgage industry veteran with over 2 decades of experience helping consumers find the right mortgage for their needs. I've also earned the Certified Mortgage Banker designation, which is the elite designation in the mortgage banking industry. My role here is to help educate and provide expert guidance, enabling you to make informed financial decisions with confidence, tailored to your unique situation and goals. Mortgage basics. What is a mortgage? A mortgage is a type of loan used to purchase a home or other real estate. It allows a buyer to borrow money from a lender, usually a bank or a mortgage company, to cover the cost of the property rather than paying the full price up front. A mortgage makes it possible for people to buy homes by spreading the cost over many years, while the lender uses the home as collateral until the loan is paid off. How does it work? The borrower agrees to repay the loan over time, typically in monthly payments. These payments usually cover both the amount borrowed and interest. The loan is secured by the home itself, meaning the lender can take ownership of the property through foreclosure if the borrower fails to make payments. What is the difference between a mortgage and a home loan? The terms mortgage and home loan are often used interchangeably, and in most everyday situations, they mean the same thing: a loan used to buy a home. However, there is a slight distinction in technical terms. A home loan refers specifically to the money borrowed to purchase or refinance a residential property. A mortgage, on the other hand, is the legal agreement that secures that loan with the property itself. In other words, the home loan is the financial product, while the mortgage is the contract that gives the lender the right to take the home if the borrower doesn't repay the loan as agreed. In practice, when people say mortgage, they're usually referring to the entire borrowing arrangement, including the loan, interest, repayment terms, and collateral. How much can you afford to borrow? How much you can afford to borrow for a mortgage depends on several key factors, including your income, monthly debts, credit score, down payment, and the interest rate you're likely to receive. What types of mortgages are available? Well, there are several types of mortgages, each designed to suit different financial situations and goals. A fixed rate mortgage has an interest rate that stays the same for the life of the loan, offering predictable monthly payments, commonly in 15, 20, or 30-year terms. An adjustable rate mortgage, often referred to as an ARM, starts with a lower interest rate that can change periodically after an initial fixed period, which can be beneficial in the short term, but it does become riskier over time. FHA loans, insured by the Federal Housing Administration, are designed for borrowers with lower credit scores or smaller down payments. VA loans, available to eligible veterans and active duty service members, offer favorable terms with no down payment required. USDA loans are aimed at buyers in rural areas and also offer zero down financing options. For high cost properties, jumbo loans are used when the loan amount exceeds conforming loan limits, and they typically require stronger credit and larger down payments. Each type of mortgage has its pros and cons, depending on your credit, income, and homeownership goals. We'll go into more detail about different types of loans and mortgages in other videos.